You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? This is Mike from The Moose and the Loose. I hope you are doing well on this Monday. Today, we are going to talk about Nutrien, and we're going to try to determine if it's a right fit for your portfolio. Not for mine, but really for your portfolio. In order to do that, I analyze companies in a kind of like pretty simple way because I like simple frameworks. It makes my life a lot easier, and it's also make it like super clear if a stock should be part of my portfolio or not. So we're going to go through the business model, we're going to go through the narrative, because we always want to know what's the investment thesis here, like what would be the growth potential. And finally, we're going to match it with the numbers to see if the numbers are matching the narrative and look at potential risk, because any type of businesses will be tied with some risk, and it's not a matter of like trying to find a company that has no risk, which doesn't really exist, right? But rather be comfortable with those kind of risks. So, for example, I'm well comfortable with technology, so I don't mind seeing those like big hype and then big crash sometimes, so a little bit more volatility. I can handle that. Or like competition coming from a disruptor, and then it's going to destroy part of the company's business model because the technology becomes obsolete. This is the type of like risk I can live with that. But imagine that I'm not comfortable with provision for credit losses for banks, and then I'm scared of like a mortgage crisis. Well, then I'm not going to invest in banks because I am not comfortable with this type of risk. It doesn't mean that it's like better or worse. It just means that I understand it and I can live with the impact of those risks. So now back to Nutrien. That's the merger of Agrium and Potash. It's been a while now, right? I think it was like done in 2018, 2019. So largest potash producer decided to join force with one of the strongest agriculture retailer, Agrium. I used to be a shareholder of Agrium back then because I really liked that business model. Didn't like too much potash, mostly because, you know me, I don't like commodity-related business models. So whenever the price of fertilizers such as potash and nitrogen is going up, well, they make a lot of money, and when it's going down, well, they lose a lot of money. So, and they have absolutely no control over the price. So I don't really like that. So I really like Agrium business, which is simply selling fertilizers and other products and services to farmers, which seems to me like a pretty solid business model, a little bit more predictable, and you can play around with your margin whenever the price goes up or down. So that's the part of the business model I really like. Fast forward today, we're talking about 20 billion in sales, number one potash producer, number three nitrogen producer, and it is a vertically integrated, fully integrated company. So they have upstream, midstream, and downstream product and services. So what's the difference? The upstream is when you like literally make the product or fake like the product. So they are mining and getting the fertilizers. So that's the upstream. Then the midstream is the transportation and transportation, storage, and distribution. So they do have this supply chain, and they're like dealing across 14 countries. So they are present across the world, which enables them to capture opportunities in many, many markets. And finally, downstream is the sale of the end product. So their agriculture retail network that is mostly coming from the merger of Agrium. And that brings some stability to the business model. So that's what they do. Like when you're thinking about the growth vector and the investment thesis here, you're thinking, well, the population keeps on growing, the size of arable land remains limited, and then farmers must produce more per square foot, and they and they then need more crop nutrient. which make a company like Nutrien very, very interesting because it's the world largest potash producer. It is the third one for nitrogen. So they're a leader in a market where it kind of makes sense because there's no other way to feed the population. The other thing that I mentioned already, it's the agricultural retail business that is coming from Agrium because it provides less growth, of course, but more stability as farmers will continue to buy nutrients for their crop. So, knowing that their business model relies on commodity prices, management focuses on a lot on efficiency. They want to make sure that they have like the best margin possible and they reduce their cost, which shows like some kind of like prudent management. And the company is also trying to buy back shares and increase the dividend to generate additional value for shareholders. So that's all cool. That's all nice, right? So it's almost like we have found a winner. But the problem is the company is highly, did I say highly? I think I would say highly volatile. So just to give you an idea, over the past 3 years, the total return is like 1.5%, so almost nothing. But during that time, between July 2021 and roughly April 2022, the stock price almost doubled. And then it crashed, and then it went up back, and then it crashed again, and back, and crashed, and back. But I mean, we're not that back more anymore, but recently it dropped again. So in other words, it is incredibly tied to fertilizers prices. So if nitrogen or potash price goes down, which is happening right now because there's a lot of production across the world, they discover new mines, they have like more competitors, so this is waiting on their growth. So when you look at the dividend triangle, if you're a DSR member, you will notice that everything started kind of like smoothly in 2019, 2020, 2021, and then a big rush following the COVID hype that I call. So 22, 23, revenue and earnings are skyrocketing, and of course the stock price follows. We even have like a more generous dividend increase at that time. And what happened after in 23? We hit a plateau, and then potash price started to fall quickly. So the stock price drop, the revenue drop, and the earnings per share drop even faster. So long story short, if you are in for a roller coaster, this is what you're going to get with Nutrien. So you may be tempted to buy it right now because it seems that we are hovering at a kind of like lowest point. The stock is now paying a 4% dividend. The company doesn't look that bad in sense where they're still in a position of leadership. They are still profitable. But keep in mind that along the risk, since there's that volatility, potash back then had to cut their dividend, and many commodity price related companies eventually end up like this. So they face a lot of competition that has like a double-edged problem on this side, because on the one side they of course have like more people selling the same product because it's really a commodity, so you don't really care about where you get the potash pretty much. You just need some fertilizers. So that's on the one side, and the other side is the more companies produce potash and other nutrients, well, the less the price will be, so the cheaper the price will be. So again, affecting margin. It's not impossible at one point it cuts its dividend, so you have to be careful about that. It happened in the past, may happen in the future, so those are part of the risk. So long story short, we are looking at a fertilizer company fully integrated, so they make money at each step. This gives them a little bit more flexibility. They can rely on a stable retail network, which is great. The narrative seems interesting because we need fertilizers moving forward to feed the population. However, the numbers reminds us that it's all about potash and nitrogen and other commodity prices. It's all about this. It's nothing else but those prices. If they are up, you're going to make money. If they go down, you're going to lose money. End of the story. So the risk, a lot of volatility, potential of dividend cut, a lot of competition, and it's hard to differentiate yourself because you're just selling the exact same thing. So now you know what to expect from a stock like Nutrien. Right now, it pays an interesting dividend. It seems that it is trading at a buying opportunity if commodity price goes back up. Who knows what's going to happen, but now you know how to handle this stock. If you want a quick tool to actually review those stocks like faster using a checklist, I've built one for you guys. So you can go to moosemarkets.com/checklist and you can put there your email address and I'm going to send it to you. It's a one-page stock checklist that will help you identify the business model, look at the metrics from a rational point of view with no emotion, and then try to make sense between the story you tell yourself and the numbers that you have in front of you. So you can download it at moosemarkets.com/checklist. And that's it. So tomorrow we are going to talk about the future of TFI International, another volatile company, but completely different business model. Super exciting. So just make sure that you review this podcast if you have not done it yet on Spotify or on Apple Podcasts. Just look for the ratings. Just click on the 4 to 5 stars and then boom, you did it. And I thank you for that. If not, well, we're going to talk again tomorrow and we're going to talk about TFI International. In the meantime, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.